Happy Saturday, everybody. I hope you guys are having a great weekend, getting ready for a Merry Christmas. I missed you guys last week. I was really, when I say I was sick, like I work when I'm sick. I get up, I do stuff when I'm sick. I laid in bed for over 24 hours. I was so sick. I think I had food poisoning, but who knows? There's all kinds of stomach bugs going around. But anyways, that being said, glad to be back. I'm looking at one data point for 2024 to tell me whether or not we're going to have massive price drops. This one data point, active listings, if it accumulates like snow next year, you better believe it will create not just a softer market, but we will have that quote unquote price crash we've all been hoping for. And by say we, I've been hoping for a price crash, if I'm being honest. Not because I want sellers to lose equity in their houses, but the prices just don't make sense for anybody. It just doesn't make sense right now. We're going to look at a few dynamics. In fact, Redfin just released something that could be a leading indicator to tell us whether or not that's going to happen. I'm also going to show you some hyper local data on Nashville. Believe it or not, guys, there's a map. I'm going to show you. It's an updated map. I've showed it to you before, but we're going to look at inventory hyper local, guys. There are sellers markets right now in Nashville. There are buyers markets right now in Nashville. And when I say buyers, I mean, you can negotiate pretty strongly in certain markets right now. Without further ado, let's take a look at the data. Okay, Redfin just released their predictions for 2024. I'm not going to bore you with their 5 predictions because we know nobody knows, okay? But they did say something interesting on prediction number 2, something that caught my eye, something that I have to share with you, something that could be a major leading indicator. And that is they said that they received double-digit annual increase in homeowners contacting Redfin for help selling their home. Now, there's 2 reasons that could happen. One is they're capturing more market share, or the more sinister reason is actually we could see an onslaught of new listings coming online in 2024. Now, if it is new listings coming online, this is interesting because they're saying alongside this, they're also seeing fewer requests from prospective home buyers. Guys, this is a shift. If this shift hits Nashville, you better believe it will be a huge buying opportunity and it will shift the market into a buyer's market here in Nashville if this happens. Now, we're going to talk about some of the dynamics going into next year so you know where we're at relative to where we were last year and how things are changing. Let's keep going. The Fed pivots. Now, the Fed pivoted. You guys know this. I'm not going to go into like this Fed pivot, but there's 2 things I'll say about it. The first is that they didn't actually lower interest rates. Okay. So rates dropped dramatically, not because the Fed lowered interest rates, but because they mentioned they were going to lower interest rates. Now, this was a pivot and this was definitely a change in tone, but it wasn't them lowering rates. It was their tone change that caught the market so bullish and mortgage rates tanked. I mean, they have tanked. Now, there are 3 possible reasons that I could think about why the Fed pivot. Now, people have been talking about Jerome Powell. Oh, Jerome Powell, he pivoted. There's something he knows. There's some kind of secret that he knows. Well, that may be true. Maybe he does see something that we don't know about. But I'm going to give you 3 things that I see that seem very obvious as to why the Fed would pivot. And 2 of them are incredibly inflationary, and I'll explain why. Okay, the first is that we had a very bad 30-year Treasury auction in November. Okay, this is the federal government borrowing 30-year bonds, and they couldn't do it. In fact, they came back in December. They shifted the debt around to where they could have a good 30-year auction, and it was better. It wasn't great, but it wasn't horrible. The debt spiral that we are experiencing is still a problem, and it could be a reason that the Fed pivoted, and it could be a very strong reason. And if that's the reason, there could be another wave of inflation coming, maybe not next year, but in 2025, maybe on the latter half of 2024. Depends, you never know. These things are unpredictable, but we could see another wave of inflation, which is consistent with history, by the way. Second reason, look at this. This was by the Journal or the National Bureau of Economic Research. They released this, and there was something that they released. I'm not going to read this whole thing, obviously, guys. We would all fall asleep. But there was one line in this that actually blew my mind. I have to share it with you. It's that commercial real estate loans account for about a quarter of assets for an average bank and about $2.7 trillion of bank assets in the aggregate. $2.7 trillion, guys. Here's the crazy part. 14% of all commercial real estate loans and 44% of office loans appear to be in a negative equity status, meaning that they've lost all their equity and they're worth less than the outstanding loan balance. Now, this is obvious that this is going on, but guys, the Fed could be pivoting to soften the blow in commercial real estate, to soften the blow to banks. That's a financial stability issue. And if it's financial stability, that's inflationary. Remember, their mandate is price stability and low unemployment, okay? But financial stability comes before both of those. And so that's inflationary. Okay, the last one is a recession, okay? In recession, there's kind of two indicators I've been looking at when it comes to recession. The first is continuing claims. I think this is the most important. We're going to come back to it. The second is inverted yield curve. You can see on the inverted yield curve, we are massively overdue for a recession. It could happen any month now. Wouldn't surprise me at all if in the spring we're in a recession. And if we are, you will be able to see it with continuing claims. Now, what's interesting about the continuing claims, they're not skyrocketing right now. In fact, they kind of stopped increasing on November 18th, and they haven't increased since. They dropped for the past and stayed flat for the past 3 weeks. So it'd be very interesting to see if continuing claims continues the upward trend, or if it takes another downward trend like this. Maybe there's a higher low, higher high, and then a higher low, and then it starts trending back up. Who knows? But the bottom line is that right now, continuing claims are below where they were a month ago. That's interesting, guys. That is not recessionary, but certainly something to watch for. Continuing claims are a very important leading indicator. Okay, so let's take a look at Nashville as a whole and talk about, is Nashville actually where is Nashville in terms of active listings? Okay, I plot these every single day because I care so much about where active listings are. And you can see they've been dropping the past month. They did this last year, they dropped, but 5779 for all of Middle Tennessee. It's 9 counties in Middle Tennessee. We're at 5779. But if we go back to 2022 and we look at the active listings in December, on December 23rd, they were at 5943. Guys, our active listings are lower by 200 than they were last year. Okay. At the same time as our active listings are lower by 200 than they were last year, look at our contracts. 1508 last year on December. Oh, that was 1457 on December 23rd. Okay. Where are they now? Today, we're at 1626. Guys, we're almost 200 contracts more than we were last year, and we're 200 less active listings. Okay, so that does feel a little tighter, but there's more to the story. Look at Davidson County. Let's go down to Davidson County here. We're at 1860 on active listings right now. But if we go back to last year, let's go back to December of last year, we were only at 1675. Active listings are accumulating in Davidson County. Davidson County is the core of Nashville, and we can see it in this chart. So let me show you. This is the million plus chart. Let's go to the under a million chart here. Look at this. The core of Nashville is exploding in active listings relative to contract volume. There's no contract volume. There's a ton of active listings. And you can see, look, 37208, 127 active listings. There's only 19 under contract. And you can see it spread. We've got 4, 5, 6, even 10 months of inventory in certain places. Look at this one, 37203, 94 active listings, only 9 under contract. So you see the contract volume tells you how it feels right now. It is a buyer's market in Nashville. These are under a million listings, guys. So this is under a million. This is taking out all those $1 million listings. And you can see even then, there are buyer's markets. Even in the zip codes, the nations, it feels like a buyer's market in the nations. I've talked to a lot of people, talked to list agents over there. It's hard to sell over there. The dynamics changed. Market softening. Downtown core of Nashville, active listings are exploding and there's no contract volume. It's a great opportunity to buy if you are planning on buying. But just keep in mind, whatever you buy, make sure that the rent is over your mortgage payment. That's a great rule of thumb to protect you from not overspending on a house. You know, there's all kinds of complicated rules out there, okay? But that's a super simple one. You can see what a house is renting for, and you can see, would your mortgage payment, including taxes, insurance, HOA, would it be higher than what it would rent for? You don't have to do like all these opportunity cost calculations. You don't have to like discount the present value. Does it rent more or not? Yes or no? Calculate your mortgage payment. Does it rent more? If it doesn't, just pass. Look at this around here. Look at the 840 band, very tight in the under a million. Okay. We've got 48 active and only 28 under contract. That's a tight market here. So you see the 840 band has actually been pretty tight. I thought that was surprising. Fairview's been a little soft. You got a lot of active listings in Fairview, low contract volume. Outside of the core of Nashville, I would say Fairview has been really soft. I mean, you have to get south of Columbia to see anything near that. But south of Columbia, I mean, that's out there. It's very rural. Gallatin a little bit softer. 300 active listings, only 70 under contract. That's a 4-month supply, which is, to me, a buyer's market in Nashville. But nonetheless, typically 4 to 6 months is more balanced. So this is for under a million. Let's take a look at over a million. Over a million, you can see the one place that surprised me at over a million. It is accumulating, but it's a fairly balanced market across the board till you get, of course, downtown Nashville, pretty heavy. Even north of the river, it's pretty heavy. 37207 surprised me. And then look at this, north of 40. This one actually really surprised me. North of 40, Lebanon, $1 million listings are going strong. Now, I looked at what this was. It's new builds. New build $1 million listings in Lebanon are going strong. And you can see, I mean, there's 27 active, 8 are under contract. Those 8 that are under contract, they're new builds. There are newer houses. I don't know if they're all new builds, but they're newer houses. They're $1 million. They're large lots, no HOA, nice houses, and they're going. Brentwood, 175 active, 26 under contract. It's a good time to buy in Brentwood, in my opinion, if you're buying over $1 million. Because this inventory tightens up. It tightens up. You remember it was tighter in the spring season. It's very seasonal. And if you are buying in Brentwood, it's a good time seasonally to buy. I do expect, I've talked to a lot of people in the spring. There's a lot of people planning to buy in the spring that I've talked to. They've decided to wait till the spring. That's when the school zones, people start planning school zones and everything else. It gets crazy. So if you are trying to buy in Williamson County, it's not a bad time. I mean, it's not bad to buy in the spring, but just there's a lot more competition. It's a lot trickier to get a great value. Whereas right now, you can have those conversations. What's most important to you? It doesn't necessarily have to be price, but what's most important to you? You can get those and you have those conversations when it's a buyer's market. It's a buyer's market in a lot of $1 million+ areas. Now, that being said, I did want to show you one thing that I thought was really interesting. This is my tool that I've used. It's a neighborhood analysis tool. I simply plotted 5-year history in each neighborhood so you could see. And look at this. Here's Hurstbourne. Let me show you how it works. It shows you all the listings that it pulled. And then you come down here, you can see a price per square foot chart along with active under contract listings in the neighborhood. And you can actually see what's really cool about this. You can see whether or not closing terms, whether it's a cash buyer, new builds versus existing. It shows you transaction volume in the neighborhood. It even shows you lease pricing based on square footage and based on, just total lease amounts in that neighborhood. So this is pretty cool. It's a pretty cool tool. But the one thing that's just stuck out to me, this was kind of funny. So I pulled Hurstbourne and you can see active listings. Look at this. That's a very well-priced house, $249 a foot. It's below anything that's sold in this neighborhood since December. That kind of makes you wonder, guys, just because it's the lowest price house doesn't mean that's a good sign of value. So when you look at the listing, you can see here's the listing, and I'll just flip through the pictures and maybe you can pick up on why this house is less than any other house in the neighborhood. And it's actually much more obvious when you go to Street View. I don't know if you could see it, but here we are in Street View. Look at that, a cell phone tower right in the backyard. And guys, that cell phone tower is like almost as close as this house. Based on the chart, I could say, is it the best value? Maybe not. I don't know. A lot of people like stuff like that. Lowest price doesn't necessarily mean you're getting the best value, but this can tell you whether or not a house is priced very quickly when you go into a neighborhood. So pretty cool. I offer that to my buyers that are buying with me. I actually use this tool with them. So I'm going to be using this to analyze whether or not it's a fair price for a house, how much we might be able to get. You can see here's a Lad Park. Lad Park. It's got all the listings. You can see trend down here, trended down for the past 2 years. You can see the active listings where they're priced. Look at that, under contract, everything in the 250 and below, under contract, above, still active. So you can see very quickly where houses are trading. It's a pretty cool tool. I'm pretty proud of it. I built this while I was sick and I missed my video last week. So if you wanna use the tool, it's free for my buyers. You're welcome to it. And for my paid subscribers, I'm going to send it out to you guys so you can use it too. And with that, I hope you guys have a great rest of your day, and I look forward to seeing you next Saturday. Have a Merry Christmas. Thanks a lot.